What up, guys? You're welcome to day one. So this is the first episode of this series, and in today's episode we'll be talking about market trends. On this topic, I'll be breaking down everything about trend, how you can actually use trend to determine where the direction of the market is, whether the market is going up or coming down, how to position yourself properly in the market using trends. All right, even if you're in a position, how you can actually use trend to determine if you can continue staying in that position or get out of the position. All right, so this is the first episode of our lock-in series. I'll be doing this for the next 30 days, so make sure to stick around and watch all the videos. This is just the start. Without wasting much time, let's get right into the video. If you're seeing this video for the first time and you haven't subscribed, please hit the subscribe button. I would appreciate that. That is the least you can do to support, and I'm doing all this for free. All right, so why not subscribe? All right, it doesn't take anything to actually subscribe. So subscribe to the channel and stick around for the next 30 days and you'll be learning a lot. All right, so let's get right into the video. So the topic today is market trends. All right, so we'll be looking at market trend on this episode. What is market trends? We'll be talking about types of trends, major and minor trends, time frame correlation of trends, reversal and continuation of trends, then rules that confirms reversal and continuation of trends. All right, so that being said, let's get right into the teaching, I guess. All right, so what you're seeing here is just to show you, explain basically what trend is all about. So we're going to start with what is market trend. So basically, market trend shows or tells us the direction of the market. So I guess I'm gonna be typing that. So let me just pull my test tool, and trend basically shows you, or basically tells you or tells us the overall direction of the market, So yeah, if it basically tells us the overall direction of the market. So if the market is going up, we call that, we'll have a name for that. And if the market is going down, we also have a name for that. All right, and this has to do with prices. All right, so for a particular market, let's take gold for example. If the prices of gold are actually going up, we say that gold is in a particular kind of trend. All right, then if the prices are coming down, let's say we are having decline in prices, we say that gold is in a particular kind of trend. So but there are situations where the prices are not really like going up or coming down. We are just basically making equal lows and equal highs. Then we say um there's a particular kind of trend, or there's a like that particular there's for the prices of that particular asset. Let's take for instance gold, to actually keep making equal lows and equal high. We say there's a gold is in a particular kind of trend. All right, and we'll be talking about all those type of trend in this next sub category, which is the type of trend. So type of trends we have, let me move this a little bit up. And all right, I'm gonna need more space for this, so let me so all right, so the next one is type of trend. So we have, under type of trends, we have uptrend. All right, uptrend, we have uptrend, we have downtrend. All right, and we have consolidation. You can as well call this the sideways market. So we have consolidation or the sideways market. All right, sideways market. So we'll be breaking down every one of these types of trend one after the other. So we'll be starting with uptrend. Now, remember when I talked about trends that we used good, like as the example there, and we said that if the prices of good are going up, like maybe the demands are high and the price just keeps going up. So when demand is high, prices practically goes up, and when supply is high, like prices practically comes down. So if we're having increments in prices for a particular asset, we see that that particular asset is in an uptrend. All right, just like we have something like this. But of course, that increment in price is not just gonna happen straight. All right. So what I mean straight is not just gonna happen this way. Let's say we have something like this. Price just, where is that to? Price just shoots up like this. All right. So it's gonna go up, come down, go up, come down, go up, and this is how we keep hitting new highs and price just keeps increasing. All right. So when we have something like this in the market, we see that market is in an uptrend. All right. Now the opposite of this uptrend is the downtrend. All right. When we're having opposite of this, instead of price to, like, go up, we have prices start coming down. Right. Now this is what I mean. All right. So you can see here I said prices cannot just go up straight. They have to, like, make highs, like basically what we call, I don't want to start confusing you guys with some terminologies, because we're actually going to get to that, but we have some kind of push. That is what I'm going to call it for now. So we'll have this push, then after that push, market always has gets a retracement, just like the resting period, right? It's just like we have a push, then after that push we'll have a resting period where price is for a little bit, then we take off again and start moving up. All right, so we keep making something like this, and that is how price keeps increasing. You can see these high points is not will not be the same high, so the new highs that we keep printing on this trend is always higher than the previous one. So that's how we know that market is in an uptrend. So the opposite of this is the downtrend. All right, so the downtrend, in the downtrend, instead of making new highs, we switch and make new lows. We start switching and making new lows, right? So we have lows, market keep printing new lows, which is, decrease in price. So instead of making new highs here, which is, like, technically price is just increasing here. Here we're having price in the decline phase. Price is just, like, decreasing. All right, so this is uptrend and this is downtrend. Now for consolidation or sideways market, this is when there's no particular direction in the market. Like I give this illustration here, you can see that we kept making equal highs and equal lows. All right, so there was no, like, breakout of or anything as such on this particular kind of trend. All right, so market just keeps moving in a box. All right, let's say we'll have something like this, it gets to these points, then sellers engage. So we just keep having something like this till we finally have a breakout. So wherever direction we have that breakout, that is where the new trend is going to set in. All right, so if we have the breakout on the upside, all right, so the uptrend sets in and we start making this kind of structure, right? But if we have the breakout to the downside, all right, the downtrend sets in and we start making this kind of structure, right? So that is it for the type of trend. I hope you understand basically what an uptrend means, which is an upward trend, right? A downtrend means a downward trend. That means we're having declining prices. So I don't know if I should add that, if that is necessary. We'll have increments in prices, increments in prices. All right, and for this we'll have decline in prices, decline in prices. All right, so the why for this, we see price moves in a box, price moves moves in a box, no particular direction, no, or let's say no defined direction. All right, I think that is a more correct way to put it. No defined direction, and that's basically it for the type of trends. All right, now let's go to major and minor trends. Now in terms of this trend, there's what they call time frame correlation of trends. All right, I'm going to I'll be combining these two, all right, because they both work together. Now for us to have major trends and minor trends, there's what we call structural highs and structural lows. All right, and that's what we'll be talking about in this next category, right? So minor trends. Remember what I said in the first example, when we were talking about type of trends, I said we have uptrend and downtrend. Now uptrend looks this way, right? Make highs, lows, highs, lows, highs, lows. So these highs and lows points what we call structures, right? So I'm going to annotate this. Let's say here we have a low, right? And after that we have a high at this point. Let me use capitals. All right. Then we have another low here. But now this low here is higher than this one, so we call it a higher low, right? Now after that we have a new high, but this high is higher than the previous one, so we call it what? A higher high. So this is how we, if market keeps printing these structures, then you can also determine your trend from this structure. So we can say an uptrend is basically the increment in prices, or it forms when market starts printing series of higher highs and higher lows. All right, let me clone this. All right, so series of higher highs and higher lows. Now same thing for the highs. I'll have something like this. So this is it. Now the reverse is for the downtrend. All right, so for the downtrend, so you can see the downtrend price is falling, right? So we'll have a high here. We have a high. I'm going to put that here. Then we have a low. Then we'll have a low. Then we'll have a new high. Now this high is lower than the previous one, so we call this one a lower high. All right, a lower high. And for this, we printed, after we made this high, we went ahead to like print a new low, but this low is lower than the previous one, so we're going to call it a lower low. So we can also see the downtrend is decline in prices of a particular asset, lower low. All right, or when price is making series of lower highs and lower low, you can see the structure is in a downtrend. All right, so sorry, so this is supposed to be here, and this is supposed to be here. All right, then something like this, then this here. So that's it for that. Now let's move to this major and minor trends. Now we've already established that this is an uptrend and this is a downtrend. Now inside of all these trends, like when market is moving this way, printing these higher highs and higher lows, all right, and I said something when I was explaining trends earlier, type of trend. I said market does not just move in a linear direction, like in a straight line, or let's say put it this way, it doesn't just move like this. All right, it does some kind of push, then after that push there's a retracement or like a break, just more like market is taking a rest. Then after that it gets to a particular zone, then buyers come in again and they get another push, then we'll have another period of, so it's in different phases. So we have like phase one, we have like phase two, and we'll have like phase three. All right, so we are going to divide it into three phases. All right, so we are going to define market movement into three phases. Now phase one is the push, phase two is the resting period where market retraces. So you can see phase one is more like we bought, then after buying market, the sellers kind of come in, then after that buyers took over again. You can see that buyers are always taking prices to a new high, and that is to tell you like which side of the market is actually dominant in this trend. All right, so we'll have the first phase, the push, the resting, which is the retracement, then another push, the second push. All right, so we're going to call the first push the impulse. All right, this is when market is like the impulse is the first where we have that like very high buying activity or buying momentum. Then after that there's a correction, which is the opposite trend in this trend. Like this is an uptrend, but in this uptrend we have like an opposite trend, which is this case is all right, this phase where market is selling in a buying market, just like the market is buying overall. All right, so if this is a higher time frame, now the market is buying, but when you come to smaller time frame, you see the market selling, but this selling is short term. All right, so that is what we call our minor trend. Right, so we'll have three phases like we said. The first is the impulse, then we'll have correction, and the third is the continuation, which is another impulse. So it's basically impulse, correction, continuation. All right, correction, continuation, correction, continuation, correction, continuation. So that's how the market moves. All right, so that being said, same thing applies to this one, the downtrend. We'll have an impulse to the downside. All right, so impulse is not just in the upward direction. Impulse can happen either in the upward direction or in the downward direction. So we can have impulse coming down or impulse going up. So for downtrend, the impulse is always coming down. All right, and this happens with a lot of momentum candles. That's how you know an impulse. All right, then why the corrective takes slow. This can happen. Let's say this can take a day or two to can take one day to happen. Why the correction takes like 2 days. All right, to show you that the people buying here, the buying force is actually low compared to the selling force. All right, or the pressure, the buying pressure here is actually low compared to the selling pressure, and that's why we have the impulse happen in like practically lesser time than the correction happens. So we have impulse, correction, then the market continues in that direction. So during this continuation phase, we keep breaking the previous lows, or in the case of an uptrend, the previous highs, and that's how you know a dominating trend. So if we keep breaking these highs and these lows, that can actually tell you that, oh, we are still in this trend. All right, so that's how you can confirm a dominant trend. So if for instance in this downtrend we keep breaking structural lows, we can say that the market is in the downtrend. Like this downtrend is still dominant, is still active till market structure says otherwise. All right, and we're going to come to that when we talk about reversal and continuation. All right, same thing applies to this. Now that being said, since we've already categorized the market movement in three phases, the impulse, correction, and continuation, now talking about major and minor trends, we also talked about minor trends happening in the midst of the major trends. Let's say this is the major trend, which is what? Uptrend. But in this major trend, we'll have minor trends that are happening. We'll have this sell, which is like a downtrend in this uptrend. All right. We'll have this correction here, which is like a downtrend in this uptrend. So those are the minor trend. Why the overall structure is the major trend, we can also find minor trend in major trends. All right. Now coming to time frame correlation, this is to tell you that trend happen in any time frame. It does not happen in a one time frame or in a specific time frame. Trend can happen in the 4 hour time frame, in the 1 hour time frame, 30 minutes, 15 minutes, 5 minute time frame. Trend can literally even happen in the one minute time frame. All right, so now how do you correlate all of these to so that it doesn't confuse you? All right, so you do it better by starting with the higher time frame. Now I'm going to like make this example with, let's say, two time frames. All right, which I trade with. Now let's say I'm like more of a swing trader, and my most of my trades are usually on the higher time frame. All right, now if I'm going to trade, all right, if I'm going to trade this structure, I'm going to start. If I'm going to take a trade, I first of all start from the higher time frame to make my analysis, then I go down to the lower time frame. All right, so let's say this particular structure is on the 4 hour time frame. All right, so when you come to the 1 hour time frame, you see like this is the structure on this higher time frame, but when you come to the 1 hour, you start seeing something like this, right? Like minor trend inside of these major trends. I'm gonna keep it this way, then change this to, let's change it to another color, let's say red. So but this is okay, let me just put it this way. Let me take this off and do it properly. Let's say this. So we are going to change this to green and a much more, so this is it. And let's say we have this, a break, then market goes in a downtrend, and before it changes again. Now for this, I'm going to make it red. Now if you look at this, you're going to see that, oh, let me clone this so we can have, now clone this. All right, that is taking some time there, but so let's stop here. All right, you can see this, the first trend was on the 4-hour time frame. That's where we got the major trend, but we came down to the 1-hour time frame and we are seeing something like this even on this impulse. All right, now we've already established that the market moves in three phases, which is impulse correction, then like the second impulse is always a continuation. Like we have an impulse, correction, continuation, then correction, continuation, correction, continuation. Now you, if you go to the lower time frame, this was what we found out on the 4-hour time frame. Then when we went lower to the 1-hour time frame, we found out that even on this impulse we'll have like some minor trends, right? Now the overall structure on the 4-hour is the major trend. All right, but when you come to the lower time frame, you're seeing minor trend inside of this major trend. All right, now you can see a minor uptrend inside of this major uptrend that is following the structure. All right, now inside of this uptrend, you're also seeing a minor downtrend. So this is kind of opposing the trend, and you can see that this opposing trend is not a short term. All right, it's not long term because the overall structure is bullish. So whatever price is doing here is only going to do it for a short period of time, and once it hits a key level or comes to a particular area of interest and buyers start coming into the market, that structure is going to fail and is going to continue with the original structure. That's what you have to like understand, right? So we'll have this uptrend, we'll have the um you know the opposing trend, which is the downtrend in this particular structure. Then we'll have an uptrend. You can see it move that way. Same thing here. All right, same thing here. We can have this, the impulse being the red, then this clone, and this being, so just that in this case the buying activity is smaller compared to the selling activity. All right, but you can see that inside of this major trend we'll have like let's say this is the major trend. Oh, time. um then we'll have like these are the minor trends, right? Yeah, so that's it basically. Then we'll have with time frame correlation, this could be happening on the 4-hour time frame, and this could be happening on the 1-hour time frame. 1-hour time frame. All right, so you can as well find this on the 1-hour time frame and go down to the 15-minute time frame to see structures like this. So it works with time frames. All right, so if you're using 1-hour time frame as your higher time frame structure, that means you have to look for this minor trend. All right, on the 15 5-minute time frame. If you're using the 4-hour, you use the 1-hour 30 minutes. All right, so if you're using 15 minutes as your higher time frame, like for those scalping the market, um that means you have to go to 5-minute time frame or 1-minute time frame to find these minor trends to trade them. Now now time frame correlation of trends out of the way, we'll have reversal and continuation. Now this is very simple. Pay very close attention. Now when I was making this example, you can see here on the impulse we have an uptrend that aligns with the overall trend. Then after that we have an opposing trend, right? You can see that before we actually stopped buying, because market got to a certain level or a certain point and stopped buying before we had this reversal here, all right, this opposing trend. Now something happened, all right, we have something like this. This is the impulse. The market gets to a particular level and breaks this recent low. All right, this is the change of character that we need. Now I'm going to color this green and I'm going to make this red. Now this is the uptrend, right? Now the uptrend gets to a certain level. Remember, we maintain this uptrend because we keep making series of what? Series of low, high, higher low, higher high, higher low, higher high, higher low. We made another new high, right? The moment we broke this higher low here, you can see the market change trend from the uptrend that we were previously in to a new found downtrend, which is short term. This is in this overall uptrend now. I'm telling you how reversals occur. So this is where we have our reversal. All right, market broke a previous higher low. Here we still have this our structure. Here, these higher highs. All right. This is so, and higher lows. All right, we still have all of this. Then we still have all of this here. I'm going to change this to red. All right, we still have all of this, but this is where the reversal happened. Now the break of a higher low here is what actually caused this reversal. All right, and if you check for the continuation, for this uptrend to continue, market has to break like previous higher highs. All right, for continuation of an uptrend, market has to break what? Previous higher highs. For continuation of a downtrend, market has to break previous lower highs. Let me take this small. Do you understand it now? Now, talking about reversal and continuation of a trend, for continuation to happen, we have to break, for downtrend, we have to break previous lower lows, all right, for continuation to happen, all right. Now, for uptrend, for continuations to happen, we have to break previous higher highs, right? Now, for a reversal to happen, we have to break the previous higher low in the case of an uptrend that is turning to a downtrend, all right. Now, what if we're moving from an uptrend, from a downtrend to an uptrend, like in this case now? All right, so market, let's say we got to this level now, we've made an uptrend, a higher time frame, higher low, and market wants to change to the uptrend, which is the dominating trend in this case, right? And market wants to change again. So what are we going to do? This is what happens. We break a previous lower high point. This is how market changes. So this is reversal. For uptrend to downtrend, we break a higher low. All right, so this is where the reversal happens. We break a higher low. Then for downtrend to uptrend, we break a lower high here. So the moment we break a lower high, that is a confirmation for our reversal. And for continuation, for downtrend, market has to keep breaking lower lows. For uptrend, market has to keep breaking higher highs. You can see that example here. So that is for reversal and continuation of. So rules that confirms reversal and continuation of a trend. So the rule is that for confirmation of reversal, reversal for an uptrend, I've said that before, for an uptrend to a downtrend, we have to break a higher low for that to happen. All right, and for confirmation of a reversal from a downtrend to an uptrend, we have to break a what? We have to break a lower high. You can see I've already made that example, so that confirms it. Now for continuation here, all right, for this continuation, we've talked about reversal. Now for continuation, we have to break previous higher highs for an uptrend. Yeah, previous higher highs for an uptrend. So if we keep breaking previous higher highs in an uptrend, that is a confirmation that we are in an uptrend, and that uptrend is still dominant. All right, that means buyers are still in power. They are still dominating that particular trend. Now, once that changes and we start breaking higher lows, that is reversal. But if we keep breaking higher highs, that is continuation. I hope you understand that. All right, now let's go to the live chart and see some examples, because I think that's where everything comes down to. All right, so we've seen the textbook example. Now let's go to the live chart and see what it looks like. All right, now this is gold. All right, and this is the 1 week time frame. All right, I'm currently on replay mode. Let me just take that. All right, so I currently have a position set on good. I'm gonna delete that. Okay, let's go to the 4 hour time frame. And yeah, this example here is a very, very good example. All right, it's a very good example. But let's say this is a 1 hour time, this is a 4 hour time frame. Now on this 4 hour time frame, if you check, this is an uptrend, right? But in this uptrend, you can see that we are having minor trends in it. Now let me draw it out. We'll have a low, market printed a high, a low, high, a low, high, a low, high, a low, high. So we are looking to make a new high now. So we made let me make this very bold. So we made a low here, right? So market made a low, then we went ahead to make this high, made a new low, this, this, this high, this low. Now observe something. All right, I want you to note, observe something from this particular structure. Right, you can see that the highs the highs that we keep making on this particular structure are higher than the previous one, which makes it a higher high, right? And check the lows as well. The lows are always higher than the previous one, which makes it what? A higher low. So we are having a higher high here. So we are having a higher high, and we're having a higher low as well, higher low. So this is what we are having, and you can see for this uptrend to continue, market has to keep breaking previous structure. Same thing here, we have to break this previous high here for this uptrend to still stay intact. All right, and same thing here. Now in this uptrend, now you're going to see that on the impulse we're having minor uptrend and downtrend. Now let's focus on these corrections. All right, we said the market moves in 3 phases, which are impulse correction, continuation, right? Impulse correction, continuation, impulse correction, continuation. All right, and that's what we're seeing here right now. Now let's go down to the 15 minutes. I think that's where we're looking at structure on the 4 hour. So and we've already established that this is an uptrend. So we're going to the 15 minutes to see the minor trends, like the counter trends that are inside this uptrend. Now the first counter trend you saw here was this. All right, this was the first counter trend. You can see market has to break this previous low here, higher low here, for it to shift. And the moment we got to a key level, we tapped buyer setting. Look at, we have to break the previous lower high for it to change from this downtrend here to an uptrend again. And let me make that bold. All right, for it to change from this downtrend here to an uptrend. Now let's look at the second counter trend on this, on the 15 minutes. You can see we made all the, we bought when we made this correction, then we started the continuation phase all the way to this top. Right now, how did we started this count? How did we started correcting again? All right, this minor downtrend inside of this uptrend. Remember, we started on the 4-hour time frame and the structure was overall bullish. Oh, sorry, we were in an uptrend. All right, we're in an uptrend, and I have to, like, let me just make this clear. When I say bullish, I'm referring to increment in prices, which is the uptrend. When I say bearish, so you have to get used to these terminologies, right? Now, so on the 4-hour time frame, we're bullish. The market was in an uptrend. Now we are spotting the counter trends in that uptrend, which is the minor trend. We talked about major and minor trends. So the major trend is the one we found on the 4-hour time frame. Now we're looking for the minor trends, which is the continuation that are happening on this lower time frame. You can say we come all the way down to the 15-minute time frame, and we're seeing minor trend inside of that overall 4-hour time frame. You can see we have a minor uptrend here and a minor downtrend. Now we've analyzed the first minor downtrend and the continuation, which is the minor uptrend we have inside of all of the whole trend. All right, inside of the overall trend. Now this is the minor downtrend again. Look at price was supposed to make a new high here but could not make, so we broke this low. So this was the higher low point that we broke that shifted structure to the downtrend. And look at the moments we got here again, market broke this high here. And that was how we continued in an uptrend again, high, low, low, high, and yeah. You see, so let's spot the third one. So this continuation lasted for a bit. You can see how structure was moving. We made a new high, low, high, low, high, low. Market was just squeezing. See this higher low that was here, we broke it, and market switched to a minor downtrend again. All right, so that minor downtrend, we came all the way to this point. So we made the low, high, low. The market printed a new low, high, low. This, see, we broke it here. All right, now we've shifted again to uptrend. You can see the market is just basically moving uptrend, then downtrend, then we shift to uptrend again, which is our impulse. We have our correction, then we move, we move back to the continuation phase. That's basically what market is doing. Right, you can see we made, after making this high, we made this low again. You can see the higher lows keep getting protected. This is to tell you that price is not looking to go lower. All right, then from here we made a new high. Now market corrected again. We're supposed to make a new high, but we made a high here. We stopped here and broke that level. So this is a change of character, a reversal sign, like I've showed you guys, a reversal that we are going to a minor trend, a minor downtrend, right? Now look at how that structure went. We came all the way down, high, low, these. Let me go back. That was not appropriate. Okay, let's put it this way. Sorry for that. So we made a high, we made a low, then this, the market came all the way to this low, then we started our minor uptrend again. Here you can see that, see, we finally broke this high, which confirms the continuation uptrend again. And right now we went all the way, after printing this high, we corrected, printed a new high. Now look at what's making gold drop currently, because we broke this low, and that is a reversal signal, a reversal confirmation, because we broke a higher low, like I've showed you guys. All right, so and that is currently why we are actually in a mini downtrend. So this does not mean that gold is in overall, is overall bearish right now. This is just like the minor downtrend in the overall uptrend. We've already checked this on the higher time frame, and we've seen that gold on the 4-hour time frame is bullish, because we've been making series of higher highs and higher lows. Now I have to switch to the 15-minute time frame, which was a lower time frame in this case, to see the minor trends that was occurring. So that is basically it. Right now gold has corrected, and what are we looking for here? So basically following what we've talked about so far, we're looking at a new high, all right, for gold to, do the continuation phase, because we've had the impulse, we've had the correction phase, and now we're waiting for the continuation phase to actually complete this move, all right? So that will be all for trends. That will be all for trends on this episode. All right. So on the next one, let me go back to. All right. So we've basically treated everything, covered everything on trend and what trend is all about. So I believe with these, few points, you already understand the trend in the market. When we go deeper into the the coming classes, you're even going to understand this, combining it with other concepts, because yeah, they are not meant to, yeah, even if with this you're not like meant to trade with this alone, you're like supposed to combine it with other concepts to even get it better. All right, so when we get to that, you know in the subsequent class, we'll be talking about other concepts as well that will even help everything align properly. All right, so that will be all for this topic, and I will see you guys. That will be all for day one. I'll see you guys in day two, all right, with a new topic. Yeah, please subscribe if you watched up to this point. It means you're locked in, you're really serious about this locking thing with me, and you're eager to learn, and I appreciate that. So please subscribe, hit the subscribe, like the video, ask your questions in the comments, and I'll see you in day two. All right, I'll see you guys in day two.